Hey everybody, welcome back to Investing with Wesley. You know, pretty much everyone nowadays knows the importance of investing, but they don't really know how or where to start. So in today's episode, I want to explain to you different strategies that investors use to turn a profit, and hopefully by the end of the video, you'll have enough information and enough knowledge to decide which strategy you want to do so that you can get started investing today. So in today's episode, I want to talk to you about the four main types of strategies. This is scalping, day trading, swing trading, and long trading. Let's get into it. Now, the first one I want to talk to you about is scalping. Now, in my opinion, scalping is probably one of the harder ones for a new investor to get into, but scalping is basically similar to day trading, except these trades happen within minutes. So the second you buy a particular stock, within minutes you're selling that stock. And the whole goal behind scalping is to take advantage of price fluctuations on different exchanges. So scalpers will often post a bid and an ask at the exact same time for different prices and then profit the spread of those prices. Their goal for their profit margin is anywhere from 0.5% to 1%. Very small percentages and very small profit margins, but if they do this quick enough and enough times, maybe with the help with AIs, they can actually turn a massive profit. These are what market makers do, and I explained to you what a market maker does in one of my previous videos, but basically a market maker just takes advantages of price fluctuations to increase the liquidity in any particular stock or fund. Now, scalpers are not focused on the fundamentals of finding valuable stocks or anything like that. They're only focused on minute market fluctuations. So the actual long-term value of a particular company does not matter to scalpers. The second strategy is day trading. Now, day trading is beginning to get a lot more popular recently as everyone is flocking to Robinhood, Webull, and other free robo-advisors. Now, the whole premise behind day trading is to collect a profit in the same day, meaning you might buy at the opening of the market and sell all of your positions at the end of the same day's market. Instead of scalpers holding on to their positions for minutes at a time, day traders will often hold on to it for hours at a time. Now, where a scalper focuses on fluctuations, day traders focus on patterns. They look at the candlesticks and the graphs and watch the market and determine which patterns will give you the best possible entry point and which patterns signify that you should sell. A day trader's goal is to make about 5 to 10% in profit every time they close a trade. Now, the third strategy is called swing trading. Now, swing trading is basically the same as day trading, except on a longer scale. So where day trading will buy and sell within the same day, swing trading will often hold their positions for a couple days to a couple weeks, and in some cases up to a couple months. Now, like I just mentioned, day traders look for patterns in the stock or the company's behavior, whereas swing traders do still look at the patterns, but they also look at how the company is performing as a whole. Recent news or publications that have posted, if there's going to be a split or a buyback, really anything that goes on with that particular company. As an example, when Tesla announced that they were going to be entering the S&P 500, all the swing traders knew that all the ETFs were going to have to buy up that stock to put it at equal weight with whatever the index said that Tesla was going to occupy. So the swing trader would know that the value of that stock is going to go up relatively quickly in the short term. So the swing trader would buy in, hold for a couple weeks, maybe a month or two, and then sell their position for a profit. Same thing if a different company that was reputable just had a little bit of bad press causing the stock to fall. They knew that in a couple days or weeks, that stock would be right back to where it was. So they would buy at that little bit of a low and sell again when it would even out after a couple days. And as far as profit goes, if you're a swing trader, then your goal for profits should be 10% or more. So if you bought a company at a small correction and it has grown 10, 11, 15, or even 20%, then that is great profits and you've met your goal. And typically at this point, you would close your positions and find a new deal. And the last strategy is probably the most common strategy that investors use, and this is the long strategy. When you go long on a particular stock or a particular company, this is the strategy you use. Long-term investors invest exactly for what it sounds, the long term, years on end at a time. The soonest a long-term investor would sell is after that year mark when the short-term capital gains turn into long-term capital gains. Long-term investors will look for actual valuable companies. They don't care about the patterns. They don't so much care about the tiny market fluctuations like the other strategies do. They're buying this company because it is a fair price with a lot of growth potential for the future, and they want to capitalize on all that growth potential. The long-term investor uses fundamental analysis to determine if a stock or company is overvalued or undervalued. And if a company is at a fair value or even undervalued, they'll invest in this and then just hold on to it and watch the company grow and watch their profits grow along with the company. Long-term investors are looking to get 20+% in profit with every stock they purchase or with every trade they do. Okay, so those are the 4 main strategies that investors use to determine how they'll generate a profit. Now, it may seem at surface level that a long-term investor is the route you should go, just because their profit margin is the greatest in percentage and it's less work. And honestly, for you, that might be the case, but I don't want you to completely discredit the other 3 strategies because there is a profit to be made in those strategies. As an example with scalping, sure, your profit margin is only about 0.5% goal, but if you can create an algorithm and give it to an AI to help you place these trades, you could do hundreds of them, maybe even thousands of them in the same day. And as an example, if you placed 100 trades, all getting 0.5% in profit, by the end of the day, the compounded return on all those profits is equivalent of a 50% increase from your starting position. And the same exact thing is true for swing traders and day traders. Sure, a long-term investor can set it, forget it, and come back in a couple years to massive profits if they pick the right company. But if you're starting with a little bit of money and a lot of time, day trading and swing trading are probably the better options for you. This is because you'll have a lot of time to study the graphs, study the charts, and learn exactly how to master your craft. And the compounding effect of placing and selling multiple trades within the same day to the same week, all of them generating a couple percent in interest in profits, can add up to a lot of money. So what a lot of people will do is start off day trading or swing trading, generate a good amount of profit, and then start transitioning into these long-term gains. The money that they continuously use to generate those profits stays within their day or swing trading strategies. But all that excess profit that they take for themselves, they'll often reinvest it into long-term positions that will generate long-term wealth for them. Now, for me personally, I'm pretty much exclusively a long-term investor. There's a couple times in recent history where I dabbled in swing trading, and that's strictly because of how the markets were behaving, like the coronavirus pandemic that caused a lot of markets to crash. So even though I'm in favor of long-term buy and hold investing, I want to give a voice to the day traders, the scalpers, and the swing traders out there, because I feel like a lot of YouTubers, financial advisors, these gurus out there, even very famous financial spokespeople like Dave Ramsey, only talk about the buy and hold strategy. But the truth is, unless you're a professional long-term value investor like Warren Buffett, you don't stand a chance in making the kind of money that day traders and swing traders could potentially make. But on the other side of that coin, they hold way more risk than you do. Buying and holding a stock long-term for multiple years on end almost always turns a profit. Whereas on the other side of that coin, I think the ratio is like 78% of all day traders and swing traders quit because they lose all their money and cannot properly figure out how to enter or exit a trade to turn a profit. Now, as for me and my personal opinion, I actually like the idea of day trading and swing trading. And the only reason I do not often partake in any of those strategies is simply comes down to time. I don't have the time in my schedule to wake up extra early in the morning when the market's open, place a bunch of trades, sell them, watch the graphs, look at the candlesticks. I just don't have time to do any of that. And in my opinion, my time is an investment on itself. I spend time creating and editing all these videos so that you can have the knowledge you'll need to invest and make wise decisions with your money. But obviously, like every one of you out there, my time doesn't just stop there, and I have other responsibilities that I need to do. So really, when it comes down to it, time is the only reason I do not partake in swing trading or day trading all too often. Ultimately, though, depending on your current situation right now, will ultimately help you decide what kind of investor or what kind of strategy you want to use to turn a profit. Are you a long-term investor like myself? Are you going to be a swing trader that's kind of in between day trading and long-term investing? Are you going to try and attempt to be a scalper, placing multiple bid and asks at the same time, generating a lot of very little profits that slowly add up? Once you decide what investment strategy you're going to use, leave a comment down below because I'd be super interested to know how many people watching this are going to be long-term investors or short-term investors. And finally, those of you that chose long-term investing, stick around and click that subscribe button because my very next video is going to help teach you how to analyze a stock properly so that you know whether it's over or undervalued and can have the opportunity to make an informed decision on your investments. If you ever had a question, comment, or just wanted something addressed, I have a dedicated Facebook and Instagram account that I'd be more than happy to answer all your questions on. It's a lot easier and more organized to just use the messaging system on those social medias as opposed to this YouTube comment feed down below where everyone's talking to each other, tagging each other's names. It can just get chaotic. Either way though, the choice is yours, and I'll see you in the next episode.